Light FM. All Heart wants to do is love you. The way they looked in the 70s, I'm perfectly happy to oblige. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And that means it's time for us to check in on money with the help of Phillip Statler from Statler Financial Services in downtown Sebring, who is on the phone with us. Phillip, good morning. How you doing?
Hey, good morning, Dave. I'm doing well today, halfway through the week, and, it's not been bad this week so far.
Absolutely surprising, as a matter of fact. I figured when the news came out yesterday afternoon that President Trump is back with his tweets, signing an order imposing 50% tariffs on steel and aluminum. The top of the hour news this morning has been busy telling us every darned hour how much that's absolutely going to kill us, and the stock market just said, oh, heck. Dow was up 214, Standard & Poor's up by 34.5 yesterday, and NASDAQ is up 156. We're just getting used to the herky-jerky tariff strategy, aren't we?
Yeah, we are. And to blow it out of the water, the Russell 2000 is actually up almost 1.6% yesterday. So a good day across the board. Unfortunately, this morning, we got some economic news that's not quite so good.
Absolutely not. We started out early on with the first of our three big employment reports that come for the week. That's the ADP, the big payroll service, giving us a guesstimate. And I always say at the outset to these quotes, ADP is almost never right on the absolute number, but they do tend to be trend-wise accurate anyway, and it's not a good trend. They expected 110,000 new private sector jobs created last month. We only created 37,000, nothing like a 60-odd% miss from what was expected, right?
Well, that's right, and it's the lowest we've seen since 2023. So that's a significant downturn. The markets were green. I think when this number came out, they kind of switched to red. So not liking this number across the board. It does show that things are slowing down, at least last month they did.
At the very least for 1 month, yeah. And I've got to assume some of it, when you're looking at it being May, with all of the projected tariffs and everything, and the assumption, anyway, that a lot of businesses were going to slow down by a little bit, I got to assume that some of it was a hold on hiring for a lot of businesses. But good golly, Miss Molly, we're talking about a 60% miss. And since we pretty well are sure that the pressure is downward on government employment, the big employment number that comes out on Friday morning for the total jobs added number, I gotta believe that puts a real pall on any expectations for our Friday report, doesn't it?
It does. Now we do have an expectation now on that. The month before, April was 177,000. So they have downed it some. The expectation is for 125,000. So we'll see how close we get to that number.
That's only about 5,000 less than the tip sheet I had was saying they were expecting last night for Friday. So we're not getting pessimistic yet, and that's probably healthy for one's mental health. But it's obviously a disappointment. A little bit later on today, it's going to be kind of interesting. We're only like 4 or 5 days ahead of the next Fed meeting, and we're going to end up getting their beige book this afternoon, which you and I and regular lay people look at it and go, oh, geez, our eyes cross, but all the green high shade people comb through the beige book with a fine-tooth comb, and it's going to have some market-moving effects this afternoon, given the fact that we're that close to the next Federal Reserve rate-setting meeting.
It could very well. We had a couple of other things that hit across the board yesterday after we got off the radio. The JOLTS report came out, and more job openings than was there the last month. It was 7.4 million, up from 7.2 million. So that may be good news. Factory orders, however, down for the month of April, minus 3.7%.
We were expecting a small decline, if memory serves, weren't we?
We were expecting 3.3, but if you look at the month before, it was up to 3.4% positive. So
which may very well be, again, adjustments with anticipated tariffs. I got to think the JOLTS report is at the very least going to give us at least a calming effect of this ADP report. If the employers are out there saying we're looking for people to hire, the ADP report might indicate just a blip for last month as everybody went on hold to see what the administration was going to do.
That could very well be. You're right.
Keep my fingers crossed on that. The rest of the big news today has been much as anything. Oh, goody, we're getting friends fighting. Elon Musk is no longer employed by the federal government, and yesterday he said the big beautiful bill that President Trump is trying to push through the Senate and did push through the House is an abomination. I haven't heard that word in a little while, but Musk thinks it's a flipping disaster. I wonder if he's got enough clout still with President Trump to change any minds in the White House.
I'm thinking probably not. I mean, but think about it. You know, he worked hard with his group to cut spending, and you turn around and look at this bill, and it's full of spending. So, you know, I get his position.
Absolutely. Most of even the conservative estimators on the thing are saying it's going to bump the deficit up. Now, for the sake of amelioration of that, President Trump yesterday said he wanted to put a rescission bill through. Once the big, beautiful bill goes through, then he wants to modify the budget elements to it to rescind some of the things that are in the bill but probably aren't going to happen, like probably the USAID agency that he wants to cut, that Musk wanted to cut as well. So basically what we said is pass this bill, but then we're going to change it anyway, which just once again makes your head spin just a little bit trying to keep track of what's going on in Washington, doesn't it?
Well, this is true, Dave. This is true.
It's gotten kind of hard to track. Hey, we got to note that big tech evidently was really, really back. NVIDIA is back to being the most valuable company on earth. They're up $1 trillion rally yesterday, bringing their market cap up to $3.444 trillion in market value for a company that 5 years ago you and I could both say we've never even heard of before.
Yeah, they definitely made some progress, and that's the case when you get some of these technology positions that, you know, they hit this point where they become instrumental in a certain industry or a certain core product, then they become quite valuable, and so that's what everybody's always looking for, right? You're looking for that company that will be in NVIDIA. They're just hard to find sometimes.
Absolutely. Word I understand is that a lot of their concerns about the amount of chips they can export to the Far East being kind of offset by a rapid growth in self-driving and artificial intelligence-driven cars, even the ones that don't 100% drive themselves. NVIDIA chips are at the guts of a lot of those things, too, and I gather that's one of their new hot sub-markets for the NVIDIA chips, not necessarily the fancy pants Blackwell one, but I gather it's keeping their volume up and giving them some bluer skies ahead than you'd look at when you consider just trade issues alone.
That's right. And so, you know, every little bit of industry that they can pop into, it doesn't have to be their high-end chip. It can be their mid-range chip, right? Anything that increases the value and the volume they're doing is going to be good news for NVIDIA.
Absolutely. Early trends out this morning. It's not a report as I understand it, but they did issue some warning, and I found this kind of interesting. After Dollar General had a gangbusters day yesterday and even gave us solid guidance for the future, kind of a competing store in the same class, Dollar Tree's report will be coming out sometime soon, but evidently it's going to look such that it's going to scare investors because they put out some pre-report guidance saying that they're going to revise their numbers for the rest of the year down due to tariff issues. So one of the off-price stores is doing gangbusters and the other one isn't expecting very much, I gather.
Yeah, that's the case. You know, I think they're probably floating some balloons out there now, so they don't get hammered come earnings time. You know, they're down about 2.5% right now this morning. So, but Dave,
it's falling 40% in one day after an unpleasant surprise when you actually issue the report, right?
This is true. This is true. So,
how are we doing on big ticket stuff?
Hey, big ticket stuff doing well. It looks like Thor Industries, the big RV manufacturer, had a great quarter. They earned $2.53 a share versus $1.79. Revenue was ahead of expectations. So they're up. Not as much as earlier, but they're still up about 6.75%. They've been up as much as 12% earlier this morning.
Cool. That,
So then
you draw the picture of the economy that the top of the hour is drawing for us, and you figure nobody's buying RVs. I'm glad they're doing well.
Yeah, exactly. And so then we had Hewlett Packard Enterprises, not the ones that make the computers. These are the guys that are the enterprise. They do data storage, networking, that kind of stuff. And they had a good quarter, beat by about 6 cents a share, came in at 38 cents. Revenue ahead of expectations, up 6.3%. So some good news for them as well. I'm trying to look to see. That's just a revenue update. So tidbit, Wells Fargo. You and I were talking about this just the other day. The Federal Reserve came out and removed the asset cap. They'd had that asset cap on their restrictions since 2018. So that little indication is giving them about 2.4% bump this morning before we get going.
Yep, they're allowed to grow again. Isn't that kind?
That's right.
I'm seeing not a nice direction on the futures. As a matter of fact, I noticed bond rates almost as soon as the ADP report came out. 10-year bonds fell by 10 basis points inside of about 5 minutes. Now, I'm seeing some updates on my equity market futures, and I'm not liking it. 45 minutes early, what are we looking at?
Well, just wait 10 minutes, Dave. They'll come out a little bit better.
Thank God.
They flip back to tinge of green, flipping. They're actually flipping between green and red, just boom, boom, boom. The Dow right now is up a whole $2.90. S&P 500 is up a whole $1.70. The Nasdaq 100 is up $1. So, it's going to be flat right now. Who knows what that's going to look like at the open? On the other side of the coin, silver down about a little over 0.4% today. Still above 34 at $34.48 an ounce. Gold up a little over 0.1%. Crude oil down not quite 0.5%. $63.14 a barrel right now.
And your Soviets are going to have to get their oil flowing again for the world oil prices to get back down to 60 from what I'm reading. The conflict even comes home sometimes. Looking across the pond, the Asian Rim market generally up. They're all kind of shrugging off the new tariff announcements yesterday as well. Mainland Chinese markets were up between 0.4 and 0.8%, the two of them, and most of the rest of the markets follow suit when China goes up over there. In the European community, again, generally positive. The average European index up about 0.4% halfway through their trading day. So we're finally going back a little bit to green after an initial shock, and the other guys are relatively happy all the way through their day, which is always good news. Want to get your retirement to get to the point where you can consider it good news when you do retire? I need help doing that. How do I find you to get the risk out of mine?
Devin, give us a call, 863-382-0037 to schedule their core retirement analysis, where we'll look at their current portfolio to make sure that they're on track for the retirement they always dreamed of. And then this weekend, hit us up for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me back here again tomorrow morning about the same time to see what kind of drama happened overnight tonight. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Bye now.